problem with third-party management is, if you do an okay job, you're going to get fired. If you do, a bad job, you're going to get fired. And if you do a good job, they're going to sell it and you're going to get fired.
That's Tanner Bickelhaupt. He's the founding principal of the Tanbic Company. Prior to forming his company, Tanner was the director of real estate for Black Rock Development, a real estate development company representing more than 44 entities with a real estate portfolio valued at over $550 million. In 2011, Tanner joined a full-service real estate investment and management company that acquired, developed, built, and managed over 9,000 units in multifamily communities in the West and Midwestern states. Since 2011, Tanner has raised over $150 million of private equity through high net worth accredited investors, which resulted in over $350 million of asset purchases throughout the United States.
You're listening to the Multifamily Leadership Podcast with Patrick Antrim, your source for success strategies for multifamily professionals, CEOs, executive leaders, and aspiring leaders that want to drive high-performance results for their property or portfolio.
This is Patrick Antrim, founder and CEO of Multifamily Leadership and producer of the Multifamily Leadership Summit, where top multifamily executives come together in a one-of-a-kind leadership summit to design fresh ideas for the future of multifamily. Welcome to the Multifamily Leadership Podcast, where I speak to executive leaders, authors, and business leaders on the topics that advance leadership in multifamily. It is our goal to give you insight into what top leaders are doing to re-envision the leasing experience and leading the apartment of the future. If you'd like to get access to other resources like videos, articles, show notes, other episodes of this podcast, or information on working with me, you can visit multifamilyleadership.com. All right, so Tanner, you've taken a lot of personal responsibility in your career in multifamily. Tell me, how was that journey to becoming an owner?
Watching other people buy Ferraris, I guess.
Right.
No, it was something that I set as a goal probably a long time ago. I mean, I got into real estate at 19. I'm 36 now, and started on the residential side, and kind of, the broad stroke is, well, why am I selling this and why are they buying this and how's that work? And, then learning about the syndication business and then, spending time and really just giving all my kind of time and resources to somebody else, why they built that and riding along that process. And then developing the strategies in there, like finding the gaps in just creating your own kind of brand. And so, I would say it was probably 2 years before I actually launched that I knew I was going to launch. And I took all the steps to do that, creating the S Corps, started having those conversations, which actually, I think was really good because it gave me a lot of validity. So when I entered the marketplace, people weren't shocked. It wasn't like, oh, really? It was more of, as a joke, what took you so long? And they understood the strategies and stuff. So I guess, it was really just always knowing I was going to do it. Just, I never really knew how, right? There's not a book. I had a lot of mentors that had some advice, but until you get in there, it's just, it's tough.
Right. The business changes when you think about it like an owner.
It's everything. I mean, you don't sleep a lot, so I would get engulfed in books. I'd wake up about 3 every morning. Just, if you wake up, then the mind turns on, and
right.
And then I start doing this thing like where I would get podcasts, or I would just trying to stay very, very positive before the day would start. So like at 5 a.m, I would go for a walk. I'd put on the podcast of whatever it was, and it was just something that I could check out on, and it would allow me to focus and go. And then when you go out to the day, and the day's hard, it's not necessarily hard, but it was just, I didn't really listen to what anyone had to say, if that made sense.
Yeah,
I just knew where I was going. And people either were on the train or they were off the train. And of course, there's always noise when you're doing this, and people have opinions. And a lot of people will tell you why you can't do something or what will go wrong. Mm-hmm. But I mean, I knew those, but I really knew that it was going to go right because I was just prepared.
Right. And so your philosophy, you have some people that model that behavior in your teams, right? I mean, you're developing leaders on your properties. Tell me a little bit about how you're interacting as an owner with your team, and what's different about when you select and hire management companies or even teams today?
Yeah, I guess I would love to hear them answer that per se, but really what it is because I started from the ground up, I know what it's like when the owner walks in, right? And I know what it's like when he just says all the wrong things. And so it takes a little bit to break that down and to give people a voice, like a true voice. And not just say like, hey, you can make decisions, but like also highlight when they make the decisions, and when it's bad, correct them quickly. And with really with really good direction. And when they make the right decision, like blow it out of the water of why it's good.
Nice.
Right. So just even the smallest stuff, like, I was telling you about an apartment manager that we have, tenant lost the key. Typically we charge $50. He noticed that she had 40 some thousand followers on her Instagram. He made a decision of like, hey, instead of the $50, why didn't you post 3 pictures and tag the property? And, we got 3 tours the next day because of that decision. Well, I didn't make that decision. He totally made that decision. And I think if you would have rewound that situation, most managers would just take the $50.
Right. Or just enforce the $50 and create a negative experience sometimes.
Exactly.
So tell me what you're doing now with brand. I mean, that's just one illustration of someone taking personal leadership. And you're kind of creating the culture, though, to inspire that. Of course, you've got the right person, which is hard to do. Find the right person that will step up like that. Tell me a little bit about what you're doing with brand and how you're getting results by creating unique marketing and positioning.
Yeah, I mean, the companies, we have multifamily, we have office, although office is not part of the long-term plan. We do get distracted by good deals, and we'll jump on those. And I would say, a large part of the focus now is the senior assisted living. And, if I backtrack, I was kind of the similar guy, of the multifamily guy, chasing yield. Senior demographics are strong. Let's go there. So the brand is really where it's formed now. Is, I would say, it's more of a private equity side, I guess, because what we have is we have a really strong following of really good relationships of people really kind of all around the world who invest. So the most powerful thing that we do is we bring equity, and we can make very quick and strong decisions off that because we have kind of the management background. So on the apartment side, we understand operations. Lots of guys understand operations. We just really understand our operations and how it fits with us. And then on the senior side, same thing. We can see tremendous value in operations quickly just because it's easier. You have 60 employees versus 4. So each property, what we do is wherever that property is, the brand becomes wherever that property is. We don't throw our culture onto the property and expect it to work. We go in and, like one apartment we have is very swanky. It's a younger demographic. It's a little bit more of a scene. Then you have a senior property, right, where it's the exact opposite. So it's really just kind of diving in and saying, how do we make this the coolest place of its kind for wherever it sits in the marketplace?
And those things are not in the pro formas or the offering memorandums, right? And so you acquire a property and you created that over time, right? I mean, your business created that opportunity, value add without actually spending capital. I mean, just choice in products. You mentioned you do some different pool parties and things like that to increase the value of that experience for the resident.
Yeah, I mean, our manager, when he's giving a tour, he's not highlighting property. He's not saying this is the pool. The whole time he's on the tour, he's highlighting our people and our community and what we do, right? People can see that it's a pool. They can see there's a washer, dryer, laundry room, whatever it is. Like, and especially if they're out looking for apartments, they've gone on 5 tours that day. They've heard the same thing. Like, now it's old.
Right.
So what they care about is they care about the price. And then we have, call it 5 minutes or however long the tour is to create the value on that. Is now, are we the best value? So that's just, we can coach our managers and we can teach them, when you stand in an apartment, this is where you stand because it makes the apartment look bigger. We do all those little things. I see that more as status quo. But I would say the reason that we're having kind of the success that we're having, that the stuff that does not go on the pro forma, what that does is that makes our occupancy run about 98%. That allows us to push, on this one particular deal, we've pushed rents the first year 20%, and we're hitting 15% this year on renewals. Nothing has changed, but people will tell you like that the property feels different. I go there, people thank me for doing major stuff to the property. I haven't of the $500,000 CapEx budget, I think I've spent $70,000 in 2 years.
Right. There's certain things that do drive yield, and there are things that get people emotionally connected to a property. And sometimes, roofs and gutters aren't one of them, but of course you've got some great assets. So tell me, what sparked your interest to really get into the expertise of the senior living space?
Yeah, it was, basically I was chasing yield. The apartment market I've been wrong on for 2 years.
So is that like, competitive to get deal flow, make the returns, and the senior living space is quieter, or is it just different?
In the multifamily world, I'm competing with institutions, life insurance companies. I say all the time, in today's apartment world, you have the smartest equity, the smartest debt, the smartest buyers, the smartest sellers. So to make a real return, you have to buy a property, you have to run it perfect. And then the market's gotten such that, you buy something at a 4 cap, you run it perfect, you turn it into a 6. Well, that doesn't really change anybody's lifestyle from an investment perspective. So, and then you get into the debate of, well, where do the millennials want to go? Do they want to go urban? Do they want to go suburban? I've spent hours debating this, but here's what I know. I know the people that are turning 72 years or older is growing by roughly 2.1%. And then what I know is that in 2019 to 2025, it grows by almost 28%.
Wow.
So that's coming. So the big issue that we're having in that space isn't the demand. The demand, we could start, technically, you could argue we could build as many projects as we could today, and we're not going to fill that demand when it comes. The problem is how do you staff it, right? How do you give the caregiver who has the most important job, who makes, probably between $12 to $14 an hour, how do you fill that? How do you fill those positions? So like that's going to be the next big, issue. It's much like we see in apartments, like where there's major hotel booms, Nashville, 17,000 hotel rooms. Come on. How do you get a leasing agent in there when they're getting distracted by the new flashy high-rise hotel?
Yeah.
Stuff.
And it seems like it'll lease faster, and you're surrounded by resort atmosphere. The construction developers experience this when there's a lot of development, getting your workforce to participate there as well. And so what are your thoughts about the really technology? And I know a lot of people are trying to get more efficient, but you even mentioned seniors. Is the technology impacting the senior experience to some degree?
Yeah, I probably get a phone call a day on some new technology package, especially in the senior stuff, because people see it as the low-hanging fruit. I would say the difference, though, with the seniors is technology is relatively new to them. So I think when our demographic gets there, it's probably going to be a little bit different story.
Right.
But, I was using the analogy in the senior stuff that I looked at a property and they were bragging that they have iPads in every room and you can order food, or grandma can order food or whatever.
Right.
But really...
Makes a lot of sense, seems like it.
Yeah, but if we're really doing our job in the assisted living is where I'm mostly focused. So I'm on a needs-based business, not a want. Nobody wants to necessarily move into assisted living. They need to. So if I'm trying to better their lifestyle, like we need to be getting out of our rooms. We should never be in our rooms. We should be out of our beds, getting meals. So one of the ways that when I'm looking into an assisted living facility is if I tour it and people are in their rooms, there's a lot of value I can create, because it's the opposite of apartments, where assisted living, it's all about the amenities, like creating the community culture. This is where we eat. Where if the multifamily guys are like, here's the granite countertops, here's the lighting.
Product, and
it's totally different sell. And I think we're seeing that a lot in the space now, as multifamily guys are chasing yields, because on the pro forma, it's numbers they haven't seen in a really long time, and they go, well, goodness, we have a lot of margin here. But then they can't figure out why they're not leasing up. And I walk in and they're highlighting the granite, where the senior operator is saying, look at our community, look at how we're playing games,
right.
And we're not playing bingo 4 days a week, right? Like there's a lifestyle.
Yeah. And do you think that's why, you haven't had any issues or troubles finding capital? Some of your programs are in high demand. Is that because the way that you think through these things in the due diligence process? Because you mentioned before there's a lot of people chasing deals, and And, sometimes these are, people looking at the money eyes or the capital structure, but perhaps they're not thinking through some of these programs as they carry out over the investment cycle.
Yeah, I think a lot of it's, there's a bit of luck, right? I'm from a small town, probably average income in that town's probably in the 30,000. So when I say I raised friends and family money, and I've raised, 150 million of it in the last 5 years, it's not really coming from, technically that pocket.
Right.
So what I did is just one person at a time, like I talked about, just people understanding a philosophy and a strategy, and just being able to kind of convey that story of where I see there's a gap and an opportunity. And so I'm constantly talking about that, not particularly a deal. So the capital that is chased, look, there's a ton of capital out there today, and people are driven by numbers, but that's not my investor. My investor is really driven by the philosophy, and ultimately, the way that I raise money, there's a high degree of trust, right? Like the last deal that we sent out funds very quickly, I know they're not going through the business plan every page, and I know they're not going through every line item. There's a high degree of trust. So I understand that, but I also embrace it and I want it because I'm prepared for the trust. But they're also prepared that they understand the risk. The risk is I could lose all their money. Now, odds are I think I've done a lot of things to negate that.
Sure.
But that's always still the underlying risk. There's things we can't control. For instance, I bought a senior deal, and we had the acuity, which is, kind of how they function, was much further along than we anticipated when we got in. So people were much further along in the life stage. And, we lost 25 residents over, a course of, call it 2 quarters, which is 4 times the average, right? Well, when your rent is $6,000 to $7,000 a month, that's a significant number, and you have $100,000 of payroll. So really, that's the opportunity. That's the opportunity where you get to go to the investors, show the flaws, right? This is where I messed up. Now, that is more of an uncontrollable. I can't control that. But I think we do a good job of showing what we can control and how we're controlling it, and we hold ourselves accountable. And then it just, I don't really ask for referrals. That's not the thing. I don't. I'm just lucky. You just try to be the best at what you can do and do a good job. And look, if I borrow money or if an investor gives money, I'm gonna give it back. I'm gonna find a way. Do everything in my ability to do that, and I'm gonna be the last one to eat, so to speak. And so it's been a good philosophy. It's not a get rich quick deal. Like, we're getting wealthy together by being good, prudent investors. And that's been the frustrating part, is I have a lot of capital, fortunately, that wants deals, and they're hungry for deals. And you have difficult to say no to certain transactions. Yeah, right? I bought one deal this year, and we can, on a typical deal, we could probably pull 25 million together in a day, which is kind of the standard. So, but if I go take their money and I do a bad deal and it doesn't perform and it's doing it just to do the deal,
right?
I just don't want to work that hard to raise money moving forward. I want to be an investor. I invest my own money in the deal. So that's really how I'm looking at each of the deal. And then I'm just fortunate enough to have some people that I can bring along as part of that.
Right. So let's back into more of that philosophy, because you're operating a little different, not different, but uniquely in terms of, in more boutique fashion, in terms of you're using third-party managers, correct, in most of your transactions. So how is that in the relationship? How do you really is it market-driven, location-driven, or relationship-driven in terms of how you not only identify a third-party manager, but what would make you as an owner really happy? Because a lot of people out there trying to figure out how to, manage for different investors. Every investor and every property has different investment objectives, but what does a management company need to do to really figure out their owner and how they operate?
Yeah, I don't see the management company. I guess I look at it a little bit different. I don't weigh real heavy on them. Like when they send me their budgets, I'm interested in their expense budgets to make sure it's in line. But because I understand the management background, I just have something to kind of hold them status quo.
Right.
And the reason that I use the
third party, it's not a more entrepreneurial, or is it just sort of standardized?
Yeah, I think that they say, well, I think payroll costs this per door, and they're just putting that number there. Right. And they're very rarely does a third-party manager, are they digging in, or they're not going to go hang out the property for a week and say, okay, I think we can run it this or whatever, right? They're just going to put their numbers on it and do the best they can. But the reason I think that there's value to that to the investor, and the reason I've chosen not to start to have my own management company, is because I think that I can pass that through to the investor. So when I go, if there's an issue and I have a third party manager and I come in and I say, hey, like, we need to change this, we do it happens quickly, right? Because I'm a customer. If it's my own management company and where there's changing, like, it just lags a little bit. So there's always that kind of fear, right? If people want to hold the account. So the key is to manage the manager. That's the key. And the key is to manage the manager and have them like you, quite frankly, right?
Right.
So adding value, giving them, empowering them. But I also understand what each one's strengths are, because they each kind of have a different one. And then part of the negotiations is I have to be very involved with the people. I show up on site all the time, unannounced, all the time. And it's not, oh, hey, let's clean up the desk, let's do this. No, that's all status quo. We expect it to be run well. And sometimes life happens, right? Like, we've had 5 tours, we haven't had time. All that stuff's good problems. But what I want is I want effort to develop the individual there, especially if they're the face of the community. That's the person. That person and my maintenance guy are, the asset managers. They know that I'm taking those guys to lunch, that I'm getting in their kitchen. I want to get personal with them. I want to know that they're good people, because if they're good people, they're going to do the right things. The maintenance guy, he's in their home. He is the face, right? And if he has a bad attitude, so my maintenance guy, John, I will never get rid of that guy. I hope to God he never gets rid of me. I mean, he is gold. And you know what? He tries his very best every single day, and I'm good with that. And I think residents get that. So when there's problems, it's not if there's problems, when there's problems, that's what you need.
Yeah, it's nice to hear from an owner the value of people. I mean, of course, the investment objectives are important and priority, but through the focus on developing talent, all that other stuff is just outcomes to what we're trying to accomplish. That's great. And so, taking you back to the beginning, what was it that allowed you to really get into this stuff, though? Was it confidence? You had specific goals. What was it that made you take the first leap to say, I'm going to do this on my own, without certainty?
My wife's crazy. No, she's obviously a huge component of that. But really, when I was going, why am I the seller, not the buyer of the properties? I'd saved most of what I had made, and so I just went around to different groups. Now I think about it, I happen to know through kind of previous employment 3 of, I would say, the top 10 largest owner operators in Arizona. I went to all of them, and I went to one that I was the closest with. I said, look, I'll work for you for free for 2 years. Here's the deal, though. If I do it, I have to be in every meeting. I have to be in every management meeting. I have to understand. I have to, and we struck a deal, and obviously I didn't work for free, and it was a great experience, because I would say that I got a 10-year experience, in 2,
tuition.
Especially just understanding the PPMs and the attorneys and the securities of it all, and the moving parts. And so I paid my dues first. Now, old school will say you need to pay your dues for 5 to 10 years, whatever. I never bought into that. I knew I would go pay my dues. I'd create value. People would make money. They did all of that. And then, I literally came home one day, and it was actually when things were going the best. And I'm like, it's time, because there's never going to be a good time. It's like kids. You're never going to have enough money. You're never going to be such like, you go. And I felt confident that I knew enough that I could protect my investors' capital. And that because I also realized the first deal that you do, 80% of your investors, again, are just pure trust. Like, they don't know if it's going to work. They're just looking at you going, because I'm an investor first, and I get pitched all the time. And when it's their first deal, like, I could really like somebody, it's very difficult for me to get across the line to actually give them money, right? And then I think about the amount of people. I mean, the first deal that I did as the Tanbic entity, the capital raise was $7.7 million, and to get the deal, I went hard $400,000 in 10 days. So here I am, brand new deal, right? Don't know. And I need to go raise 7.7. And by the way, I just put $400,000 of my money that could disappear if I can't close this thing. So when you come home for dinner that night and the wife's like, how's your day?
Right.
Like, we don't even know where to start. Right.
Right.
But, yeah, so it's all gone perfectly. Then you kind of go, gosh, it's going too well.
Yeah.
So then I just try to prepare more, and keep growing and evolving and just, it's all about the people for me. It really is. On the senior side, our model is the one that cares the most is going to win the most. That's what we drive from the property level up. On the apartment stuff, it's service, and it's really just all service, right? Because they can go, especially now in Phoenix. I mean, Phoenix went from $1 rent to $1.80 rent overnight, and really nobody knows why. It just stuff changed, and you have massive stuff coming vertical. Like, people have choices, and they have a lot. So it's an honor to have them to want to live in one of our spots. And so what we can provide is the intangibles, and so that's the niche on something like that. The deal that we're going to build up in Prescott, right? That's going to take on its own whole different culture. But the one thing that we will be consistent in is community. We want people to know their neighbors.
Right.
We want people, if somebody drops something getting out of their car, like, somebody's going to take it to them. It just, everybody's watching out for each other.
Right. It goes back to the community. Are you enjoying the development process?
With the previous company, I got to go through that process a few times. One of my dear friends is, he's built 25,000 units in town. So I'm a little bit more fortunate than some that I developed this relationship.
Well, that's access to mentorship.
Yeah. And so what I did is, I gave him a piece of the deal. I said, look, I have this opportunity. He would have given me he gave me a great deal anyways, but I don't need to get rich on one deal. I need it to go well, and I need my investors to hit a home run.
Yeah. That's bigger.
Yeah. And so, we partnered up. It's been probably one of the most fun experiences I've had. He's seasoned. He's been in business for 40 years. It's just been, I've learned a whole different level of old school, but goodness, like, that old school gets the real deals done. Like, it gets deals done, kind of the old handshake way, which again is not advisable, but we have struck such just a fair deal. Everybody's rooting for each other. I'm very, very confident now. I was confident, but I trust the deal that we're going to build and how we're going to do it. And I can convey that to the investors, and it's just part of a good story.
Yeah. So it's a nice mix. It's like concentration. Even if you look at mold or even chlorine, it's good for us in some certain situations, but too much of it is problematic, and, too much leaning on just pure cash flow underwriting or even just the old legacy approach. It seems like you're balancing, 'cause you seem like a pretty innovative guy. You're talking about, we had conversation offline here talking about new technologies and sort of the future of multifamily. And so it's nice to hear owners taking those initiatives. So is there any other lasting thoughts maybe you want to leave our listeners with?
Well, if they're getting in the business, that's awesome. I literally, I don't know what day it is. So you and I both today, we had the day wrong. Right. We thought it was, we still don't know what day it is.
Right.
I don't know if we ever solved it.
We never answered that.
But it doesn't matter. That's the main thing is like, there's no such thing as balance, right? I do a terrible job at it. I try to, when I'm home, but then I start doing emails, I go down a black hole. So it's really just, if you're going to take, where I get really passionate is if you're going to take other people's money, you have to get prepared, because you have one shot, and now you have an obligation. And, there's a lot of this stuff of like, hey, let's get rich. Let's go do a deal. Well, I can tell you, nobody runs a company leaner than I do. I have one employee. I'm like Uber. Now my team is massive. But from an overhead standpoint, I don't have to do a deal to do a deal. I'm doing a lot of deals, and deals are going good, and we're doing big deals, but then I'm investing really, really heavy. So what I'm most proud about is not that we bought the property, is that, I'm investing very, very heavily. I'm banking on it. And that's, it's just so much fun. And if you're an investor and you're investing with somebody who's an owner, but not coming in with you, right. And has the same goals, and, it's fee driven and whatever, there's disillusion. So it's really just focusing on, I get asked all the time, like, Tanner, what's another group? And I refer investors to other groups daily.
Right.
I hope that they do good deals, and I hope they make more money. And then it's just, so it's being selfless and all of it. So
Sure.
not really a lasting thought, but it's just a good time.
Yeah. Yeah. I'm going to come back to our point on multifamily or third-party operators. And what I'd like to know is the mindset and what you're thinking about when you're selecting somebody to manage your assets.
Yeah. I mean, I guess, I'm a big customer of theirs.
This is important because most of and even in our brand, we recognize and rank some of the best places to work in multifamily. And as you know, people are what create the outcomes you're trying to accomplish. And so we're lucky because we get to work with the best of the best. And they all seem committed to making great things happen for their owners and investors and doing that through understanding their internal culture. And so I'm always trying to figure out how to, communicate what owners' needs are and what the demands of third-party management are today, because they have unique challenges, right? I mean, some owners are not thinking certain ways because they're driven by just yield, or some are driven by geographic locations or different things. They don't have the budget or these kinds of things. So being in a management position, it can be challenging. And so I'm always curious what your thoughts are when you're selecting and hiring somebody.
Yeah, I mean, I've been through it a lot. I guess it's kind of like when we were talking about our property tour and somebody's like, here's the pool and this is the bedroom and this is the bathroom. Well, that's what with management companies, I expect kind of all the status quo back end, right? I expect the accounting department to control, like all that is obviously it's good because you're in business and, we're talking about fairly large projects. So like you're
not a way to differentiate, but definitely you need that.
Right. And so they all kind of lead there. I mean, if I go and I sit in 10 meetings, it really kind of goes there. Then they're going to say the people's good. But, like the last property management company that I selected on the apartment deal where they got me, like where I started to really say this is the group as they were talking, is we spent the first hour of the conversation identifying the type of person that was going to be the leasing agent. Right. So,
but understanding your deal and understanding the demographics, the potential and the marketplace.
Right. Like we knew. So, I mean, there's numbers, right? The asset numbers are going to come. They're going to show whatever the numbers are they think based off the rent comps and, all that. That's going to kick out. But where we think we can go and how we're going to do it and where it's going to fly is obviously based off the people. So what I appreciated is it was like a fresh approach of, hey, have you thought about, lots of times I get suggestions, especially like on the development stuff. Have you thought about putting these type of locks? Have you thought about, this type of floor plan, this type of amenity?
Products.
Yeah, all that stuff is helpful. I mean, absolutely, it's part of the conversation. But if I always think, if I'm a third-party manager, I want to be geared towards the investor just because I'm an investor. So what's important to me is obviously ultimately return, right? But if you come in and you lead with return and the whole, that doesn't work. Where it got my attention is we spent this time talking about, who is this individual? Actually, who's your tenant base and where do you see that going? And it got down to, is it more males or more females? What is the age kind of, where are they working? What are their income levels? And, how can we push that? Then, let's talk about that interaction. If we have this person as a leasing agent and this person walks in, like, how's that flow? But that's where I knew it was going to work because now what we were doing is now we were discussing the execution, which is ultimately the most important part, right? And one of the companies I used to work for, the owner there used to always talk about third-party management. And he would say, like, the problem with third-party management is, if you do an okay job, you're going to get fired. If you do, a bad job, you're going to get fired. And if you do a good job, they're going to sell it and you're going to get fired. Right. So it was just a high turn and burn deal. So, I'm very loyal to the managers and stuff that I have. But I felt like they connected with me. So I guess if people are going in there and they're connecting with me from understanding the risk, quite frankly, of, buying this property, all of it going, just shoot me straight. I understand the expenses are expenses, but really, what do we think we can make it be? You know, where do you
Not
fit
to
this?
save the account or keep the account, but really let's deal with what's really on the table here.
Yeah, property's running at X today. You know, here's the average income of the property. Let's say somebody's making 45,000. Like, how do we get that to 55,000? Like, how do we attract this so we can push rents or whatever the story is? But stepping on my side of the table as an investor, saying like, how basically it's kind of like thinking in the clouds. How can we make this deal fly? Right? Like, what's the X factor that we can take off all the numbers?
Right.
And there's no promises being made there. It's just the thought of it.
Is that something you can teach? Because you're spending time with people, you're getting that.
I think it's harder. I mean, management companies are busy today, right? There's a lot, and it's numbers driven, you know, because
And portfolios are changing. Maybe not in yours, but in maybe their other other investors are consolidating or transactions are happening and portfolios are changing.
yeah,
That impacts you, I imagine. I mean, and I don't know if it impacts you, but that could impact an owner.
yeah. I mean, you know, I guess the recent run is that they were acquiring more properties. They had to bring on people, and now you have guys that are feeling that the kitchen's hot. They're disposing of their assets. You know, a management company could lose 4 properties in a month. Now they have people, and they don't know what to do with the people, and it's, you know, it's tough. I'm a little bit different situation just because I'm not a big seller, you know,
Sure.
so I think I could be maybe a little bit more appealing to an operator because I prefer actually to never sell if I didn't have to. So I don't have a time frame of, hey, let's build this up, let's go. You know, high volume turn, keep it going. But even with those, you know, the high turn, high burn, it's you know, like the deal I was just telling you about that I was shopped probably 8 different operators. And literally they were almost like we'd walk out, it was like the same meeting every single time. Here's the floor plans, here's what we think should do the all that stuff was just the bullets. But it's like it was like sitting down at the table and somebody not saying like, how are you? Right? Or
Sure.
or like, tell me about yourself, or like
Right. Well, it's
nope.
like our leasing tours, though, too. Sometimes,
Yeah.
You
Yeah.
know, the customer will ask, "What's the rent? What's the square footage?" Because I believe sometimes the prospective resident, doesn't know what to ask. They should be asking like, "Where's Taco Tuesday? What's
Right.
you know what is going to happen? With my parking and things like that." But they'll ask things because they're intimidated by the process. So they ask, what's the square footage? And then when you get that question over and over and over, you prepare for it. And I imagine there's a lot of investors that are sort of standardized in what they need. And it kind of creates a culture of presentations. In your case, 8 of them that seemed the same almost.
Yeah, I mean, I think you can create a lot of value without making a promise, right? So I think a lot of operators have this, you know, if I tell you that it's this, you're going to hold me accountable and I can't control it.
Yeah, that's true. Do you think it's more or less that? Like,
Yeah, I think they're scared to death, you know, because they're, I mean, goodness. I mean, think about it, if somebody comes and gives you money and says, well, can you make it do this? And you're like, well, I think so. But, you know,
Right.
that's a lot of pressure. So I think where they're missing or where they could maybe improve is understanding that specific value on an individual basis. So like, why are you buying this? Well, I'm buying this because I need to generate a return and it's better in the market. Great. So are you interested in more of stable, you know, and understanding like, should we be aggressive? I mean, we don't even need to be aggressive because that's not your needs.
right. Would you rather have more rents, more vacancy, more higher rents, and
Right.
asking questions?
Yeah. And
more
bring the owner into your world a little bit. And the numbers are going to, again, naturally fall. Now, there's a lot of new operator or owners, I should say, that have entered the marketplace, right? And they're only focused on one thing, the number. And I get it. So whoever comes out and puts out the highest rent, you know, the lowest expense gets the account, and it's going to be a turn and burn. And maybe, you know, some companies you have to do that to kind of feed, you know, because we just lost 4 properties. Now I got these employees I need to feed. So I get part of that part of the business, you know, too. But ultimately, you know, they're going to be the wrong customer for the operator.
Right.
Because they're going to be, you're already starting off on being displeased. And lately the market could take you there. You know, lately the value adds and just buying and just being in the marketplace you could do a lot of things wrong and it was still going to work out. I don't necessarily know if that's true anymore. I think I think it's too tight. I think that the value add that has to be created is true value add. I think it's a lot of hard work. So, yeah.
Yeah, this is some good thoughts. Yeah, well, we're looking forward to having you again at the upcoming Leadership Summit, and we're looking to share some time. And you're in Scottsdale, and hopefully we can get you back on the show at some point in time.
Anytime.
All right, take care.
All right, thank you.
If you get a few moments, please subscribe, rate, and review this show on iTunes or on your own favorite platform. This helps others discover our program, and it tells us that we are doing a good job.
Thank you for listening. We hope you enjoyed the Multifamily Leadership Podcast. For show notes and other resources, visit multifamilyleadership.com.